Please join us in welcoming managing partner and founder of WestCap, Laurence Tosi, in conversation with Skift founder and CEO, Rafat Ali.
Me first? Okay. Like these canary yellow chairs.
All right.
They match your shoes.
Well, yeah, everything's yellow here.
Yeah, that's good.
Wow, they put it really far apart. Okay, so thank you, LT, for being here.
Oh, thank you, Raf.
You were here 4 years ago in 2019 and gave just a great spectral overview of what the sector was. I think it was in the second half of the day, and we figured it was so great that next time you speak, you should be at the start of the day because you can then give a more overview. And LT, for those of you who don't know, very storied career. Blackstone was the CFO of Airbnb for our world, that I'm sure you heard of him then, and has since left and started. WestCap was there before you were Airbnb, right?
Yep.
As well?
Yep.
And so WestCap now is probably one of the largest investors in travel, public and private both, right? Correct?
Yep.
Public and private both. So he still holds a good stake in Airbnb. Your investors in Blueground, Sonder was the one you exited. I don't know if you still hold.
Hopper, Flyer,
Hopper,
Peak.
Flyer, Peak, you said?
Yep.
And so you are obviously bullish on the sector in general, overall travel. What do you make of yesterday? I mentioned on stage before, the real estate guys not so happy, the operators happy. This is in the hotel industry. What's your sense of where the market is and how we should wrap our heads around it?
So it's interesting. First of all, good morning. Nice to see everybody. And now what foggy New York. I live in San Francisco. I arrived last night. I was like, why is it foggy in New York? Anyway, I guess it's not fog. A couple thoughts. So been looking at markets for a long time, probably 25 years of being an investor and an operator in not just travel businesses, but businesses. This is the market that has probably the most opposite indicators of economic health. So let me go to the positives. Record job market, low unemployment, record wage increases. Stability in the banks. Who knew you could actually have 3 of the top 30 banks go bankrupt and the market keep going along? Earnings were decent for the first quarter, particularly in technology. The S&P is largely flat for the year if you back out the tech companies. All pretty stable. The consumer's healthy. That's important for everyone in the room. Let me give you the negatives. You still have $650 billion on bank balance sheets that are unrealized losses. That's what took down the 3 banks that went down. Regional banks, which many of you probably do business with, are getting a lot tighter with credit. That usually pushes down economic activity. Consumer lending is contracting. And the big one for all of us is what's going to happen to commercial real estate. There's $2 trillion of loans coming due in the next 24 months. Those loans will be refinanced at much higher rates than before, 500 basis points, maybe more. And a lot of those loans are financed by the regional banks, which we all know are going through stress. So it's, for the first time in my career, I could say there's super polar opposite indicators. Where it plays out will be the tussle between the two. Can the consumer stand steady at the same time we're getting pretty tough news on the commercial side? It's hard to tell what's going to happen.
Do you think the consumer will stay steady?
I do.
At least a travel consumer.
I do. I mean, by the way, I thought Seth did a great job
with the
charts.
presentation, yes.
Yeah, he did a really nice job. I think the area of hyper growth for travel, which all of you have seen, which played itself out in, first of all, listings, played itself out in ADRs. ADRs over the last few years, you saw his charts. I mean, you had 40% growth in STR in a 3-year period. I think it'll be moderated growth. So you'll go back to travel as a whole. If you go back to the 1950s and you look at international travel and just travel dollars spent, it's grown at about 6%, which given the size of $3 trillion market, that's a lot. That's bigger than energy. I think we'll be back to more of that level. I think STR will outperform. I think it'll be more like an 8 to 10% growth rate. So you'll be decelerating growth. So the charts that Seth showed, the year over year will slow down, but I don't think you're going to have the sharp contraction because the consumer's healthy. And the most important thing for everybody in the room that happened, if you remember like 5 years ago, people were like, a stranger staying in my house? I don't know, right? That's gone. Because a lot of people who never would have tried STR did. So you're basically, your market cap awareness and frankly comfort with the asset class changed. And that's not going away.
So there, STR versus vacation rental, an unending debate in the industry. Where do you fall? Like in terms of this debate of vacation rental folks say, the traditional vacation rental folks, traditional, they may not be, but let's just use that word, people who've been here even before the internet came along and et cetera, versus the short-term rental layer as a tech layer, as listings players, as meta players, as urban players. Do you think it's a moot debate from a consumer perspective?
I think it is. I think the consumer now naturally thinks about. I remember the early days of Airbnb, like the awareness of Airbnb and people who wanted to actually travel to Airbnbs was very limited. And that's one of the problems we have when we're building the business. You look at it, and if we ran a television advertisement for a hotel, well, everybody in the room stayed in a hotel. If we would run it here in New York for a vacation rental, for an Airbnb, maybe 1 in 10 people. That's completely changed. That's now 60, 70% of the travelers have used STR. So I think it's a bit of a moot debate. The slide they showed about the ecosystem is interesting because marketplaces are brutally efficient and STR is a marketplace. So what you've seen come up are a lot of really innovative companies that are helping property owners or property managers be able to outperform. The chart on how professional managers were outperforming reflects the fact that there's tools, technology, connectivity, and they've gotten good at certain parts of it. And I think that's healthy. There's also been a lot of businesses that didn't make it. And so marketplaces are very efficient, brutally efficient. And so what you've seen is the rise of places where value is being created, like some of the technology sectors you pointed out, that Seth pointed out, and you've seen the fall of the other places. I think I said 4 years ago, sitting here with you, so look, STR's hard. Got to be good at real estate, got to be good at hospitality, got to understand marketing, got to understand operations, and it's hard. And here we are 4 years later, and I'd say 70% of the kind of like the come for the moment companies are gone.
The Opco Propco model that is very, very normal in the hospitality world, REITs and real estate owners, and then there's the management companies and operators, except brands. Is that coming in the short-term rental?
We used to have this expression at Airbnb. Brian Chesky and I would joke about the best thing about corporate apartments are the corporate people actually run them, because they're boring and they didn't look that good and whatever. I think Opco Propco really works. I think if you look at a business like a Blue Ground, an amazing business, consume very little capital to break even, several $100 million of revenue. Those are all apartments in buildings where the owners of the buildings realize that that's a really stable tenant and makes sense because they're great at direct marketing, they're great at operations, and so it's a better quality product. So I think the Opco Propco model will continue. There will be some people who both own and operate. And if you think about it, when Blackstone bought Hilton in 2006, one of the theses we had was to separate Opco and Propco. So eventually what became Park, which is the public company, which we put all the real estate on one side, because that's a different return model, different skill set, and we put the operating side, and we focused on growing the business. And Chris Nicetta, who's still running the business today, who we put in when we bought the business, has done an amazing job focusing on operating properties. And if you owned a hotel today, you'd really want to have something like a Hilton running it, because they're just going to do a better job, and the cash flow is going to be better, and the experience for the guests will be better. And
so the hotel brands, what's the equivalent you see emerging in the STR? Well, what are the hotel brands of the STR world? I mean, obviously Sonder is trying to be. Francis is here, he's going to speak on stage. It was one of your investments. Vacasa, you could argue, would be another. So bunch of others. V-Trip, I think Steve is here somewhere. What would it take for brands as resonant as Hilton, Marriott, and others to emerge in the short-term rental space?
Operating excellence. You have to have a great product. You have to deliver it in a way that the guests are very happy, so you get repeat usage. It has to be consistent, has to be clear, and obviously you got to run a sustainable business with discipline. I remember the first speech I gave at Airbnb way back in, it was 2014. I stood up and I showed this fulcrum. And on one side of the fulcrum I said, great place to work. And the other side of the fulcrum I said, great company. I said, if this gets out of whack and you're a great company but not a great place to work, you'll never get good people to work with you. But if you're a great place to work and not a great company, the company's going to betray you. You're not going to last very long. The question is, can you get that balance? Can you run a really good business that makes sense and sustainable? You owe it to your employees, you owe it to your guests, to your shareholders. You got to run a good business.
So how do companies like Sonder and Vacasa, the two public companies, at least in the US, get profitable and continue to grow?
Look, the market, as I said, is going to moderate growth. So if you weren't making money over the last couple of years when we had a spike in ADRs, nobody in this room would have predicted the ADRs would go the way they did. I mean, whoever knew that like everybody would go out of urban areas and go to all these different parts of the world and work from home? It was not predictable. You and I probably didn't even know what the word pandemic meant last time we were here. You have to be careful with that. So if you weren't making money during that period where you had basically the great bull run of ADRs, you should really look hard at your cost base, because it'll be a more moderated environment going forward. And they're going to have to prove to the world that they've got sustainable models.
And will these types of companies necessarily have to focus on, for instance, urban versus non-urban? Is that something that you're thinking about? I mean, I guess Blue Ground, which is a long-term stay from a corporate, that's city-oriented because it's business-focused.
Usually central business district, the average stay is about 3.5 months. It's a lot easier for people to be able to take an apartment on a month-to-month basis versus 1 year. So really the real innovation in Blue Ground is they broke up the 12-month lease and the deposit and all the pain of moving furniture and stuff like that. It plays very well to a more mobile world. And it's a great business that's profitable, and it's incredibly well run.
So I guess my question was, would for these hotel brand equivalents to emerge in the sector, would they have to focus primarily on leisure, non-urban or urban?
I think there's a solution for both urban, and of course there's a solution for vacation rentals, Rafat. I think the thing with urban is you have to look at the dynamics of each one of the markets that you're in. Because you have to look at what's the presence. I'll take an example, San Francisco. Hotels are incredibly expensive, and they're actually not that centrally located.
And not that great either. I mean, San Francisco hotels are terrible.
I don't want to offend anybody. I won't say that. But for a perfect example, so short-term rentals, urban-wise, work really well. They work really well in New York. I know that Seth pointed to some of the moves that New York City is trying to make to extinguish that. It's unfortunate. It's a shame. Hopefully they won't succeed. They've been at it, by the way, for years. I mean, if I gave you all the times I had to sit in a room with one of these thuggish union bosses and explain why Airbnb wasn't the end of the world, this is not a new story for them, and I'm sure that they will manage the situation. But you just have to be careful, both in vacation rentals and in urban. Does the mix work? Is that the chart that Seth showed? Is there a delta on value for the guests between the hotels and what you're offering in STR? Because marketplaces, as I said, are brutally efficient. If you're in a place where the hotel market's super healthy and they have great hotels, it's harder to compete. Same thing with vacation rentals. So just always be aware of what's the dynamics of occupancy, what's the offering, where does the market look, because you are competing in that market, and you have to make sure that you adapt to its challenges and opportunities.
I should say, if you use the app, you can ask the questions, and I'm going to try and get to some of the questions towards the end. We still have about 15 minutes, so please put in your questions there. You still hold a bunch of stock in Airbnb. Your sense of where the company is, they've gone through obviously what they went through in COVID, came out amazingly well on the other side. They haven't succeeded beyond their core business. They tried and experiences. Brian has gone back and forth on it. It looks like they've sort of given up on it for now. He said to me last month or the month before when I met him that he's now betting the company on AI changing his whole business. Mm-hmm. What's your sense? So
a couple of things. First of all, I think that people don't give Brian credit for what he's been able to accomplish. I mean, it is an amazing business. I remember way back in 2014, we were writing this business plan. We're like, we could get to $15 billion. Wouldn't that be amazing? And he got to 100 in value. He always had his eye on the 100. I was thinking 15 was a more modest place for us to end up. They've done a great job, and they've adapted the company. I just had a conversation with him back and forth last week to compliment him on the new app rollout. I thought it was absolutely excellent. And interestingly enough, the most prominent feature was they went back to where they started. They went back, they have it called Rooms, which is an affordable shared space. That's actually, at the beginning of Airbnb, 80% of it was shared spaces. And so Brian recognized that he could innovate back and make that available to really adventure travelers, younger travelers, budget-conscious travelers. So I think they've done an amazing job just iterating. The product's gotten better, and they've continued to grow, as you saw in the charts, even coming out of this massive cycle. They're still growing in the 20s. And I would say that on the AI piece, it was probably 2016, and we were experimenting inside of Airbnb with a company called Symantec Machines, which was eventually bought by Microsoft. And Dan Roth was running the business, and he showed us something that I'd never seen before, and it was this. He was able to do a search on Airbnb, where he was. By the way, he went on to run AI at Microsoft for years, and this is some of what's coming out of what you're seeing in Microsoft. He showed us a query search that would say this: I want to stay in Boston at a period of time where the temperature is between 60 and 70 degrees during the day. I want to be walking distance from Fenway Park, I'm a Sox fan, and I wanted a sunny apartment that's bright with 2 bedrooms for less than $400. And bam, it came out. That's the first time I saw it. And I looked at it and we thought, oh my goodness, this is going to change everything. Because that what I just described is probably 6 searches. And they were able to couple each one of the queries. So each one was asked sequentially. That's the first time I'd seen that. They then sold that technology. We actually looked at buying it, and I think Nate Blacharczyk, the other founder of Airbnb, correctly pointed out, eventually this will be available to everybody. So if we embed it in Airbnb, it's just going to be kludgy and nobody's going to know how to use it. He was right. He was 100% right. But I think Brian's right that it will transform his business. I'll give you one more stat. So when I was running customer service at Airbnb, we would spend $8 million a year changing passwords. Because people would call, they want to change their password. That's gone. You don't ever have to do that again because you'll be able to have the chatbot. So I think it's super exciting for travel, and I think it'll be a quantum shift. And Airbnb is really good at capturing innovation edges.
And so as you're talking to some of the companies that you're invested in and investing and looking at, are you, on the AI side, are you advising them to not create your own AI, but adopt OpenAI or 20 other open source type tools?
Yeah, no, it's a great question. So a couple things. Open source is definitely an aspect to AI that makes it very hard to invest in AI itself. I'd say this.
Yeah, from a venture, from an investor
for sure.
perspective.
I mean, I used this expression the other day. It's like when the internet was starting to come around, it's not like you could just invest in the internet. There was no such thing as the internet. It was how the internet made businesses more successful or larger or scale. No internet, no app, no Airbnb. What we're telling our businesses is that AI is both an opportunity and a threat. And you should analyze very carefully both of what it is. Now, some of our businesses like Hopper, they've been using AI for years. That entire engine is built on AI going out and predicting what the prices will be for certain travel. I mean, we invested in Hopper in 2019 during the pandemic. You know, that's a business that went from $5 million in revenue to $700 million in 3 years. I mean, it's remarkable what they've been able to accomplish using AI. So I think I'm going to date myself a little bit. I remember the first time I got my Apple IIe and I wrote a paper on it. I was like, wow. And then I saw the first time I saw Navigator. And I was like, wow, the internet's out there. This is amazing. First time I saw an app, which was actually embedded, or the first time I saw a mobile phone. That's how I feel about AI. The adoption of ChatGPT is the fastest to 1 million users of any technology. If you go back, all the things I just mentioned, browsers, the internet, apps, this is a revolution. And so I think that understanding it, playing with it, embracing it and using it to benefit your business is important, but be careful if you're I think these kind of AI-only companies, we'll see.
Just as we thought that AI is totally whiplashing us in terms of trying to understand it, Apple just launched this thing day before. I haven't even read the full details. Yeah. Should we care at this early stage?
So typically the early
Vision Pro. So for those, I'm sure all of you have seen the Vision Pro, the goggles, the AR, VR, mixed reality goggles, and what they're calling, what's the word? Spatial? I don't know. Spatial computing.
So I think there's 2 sides to AI that you need to be aware of. One is the open source, right? Open source clearly will take the economics out of it. It'll make it more available. Then it'll be how it's applied. It won't be just AI itself. The other side are the platforms. What are Amazon and Google and Apple going to do to bring AI into their products that make other companies? You always want to be very careful when you're building a business that somebody who has an inherent advantage doesn't enter your space and wipe you out because they have an inherent advantage, right? And that's what I think that people need to be careful. So you've got open source on one side, you've got the platforms on the other that are going to use AI in their own platforms that might make it superfluous.
How many of you are buying the goggles as soon as it comes out? Come on, many of you are. I'm sure a bunch of our people in our team. V2 is what you're waiting for? Yeah. I just hope I never have to worry about this.
I'm not a big buyer that the screen closer to your face is going to make a difference.
Yeah,
I don't buy it.
I think that's what it is. But it will get better, as we know. Questions, let's ask a question. Boy, this is a good question. How does the SDR industry level the playing field in a market where hotel industry, I guess, controls the political process, meaning they have a lot more lobbying power than the short-term rental, vacation rental world has?
That's on all of us, right? We all need to work together. We all need to participate in the political process. Look, I don't want to sound like a libertarian, but like we all live in this country because we're free. If you own a piece of property, you should be able to rent it to somebody, period, full stop. And somehow some economic selfish motive gets in the way of that. It's a shame. So we should all step up and do what we can and fight it early. I mean, for Airbnb, it's been, I can't even remember, as I said, I can't remember how many times I've had to be called into the office of some politician to tell me that the business should be removed. That's just wrong. It's just wrong for the free economy. And so just make sure that you stick together, use the venues you have, take the time, meet with the politicians, make them understand. STR has been a revolutionary change for small entrepreneurs. This country was built by small entrepreneurs. In this room are small entrepreneurs. That matters a heck of a lot more than a bunch of big hotel companies. And this is from a guy who built, at Blackstone, we built the largest hospitality platform in the world. They can coexist peacefully, but just be careful because there are political winds that are against you that you need to be aware of, and you need to participate in the process, and ignoring it's not good enough.
And I guess this will come up later with many of the other speakers on stage, in general, this is particularly true in the US, the housing shortage and STR, less vacation rental, but STR's role in it. From your perspective, you're to advise the industry on how to navigate that, because it's real. The housing shortage is real.
The housing shortage is absolutely real. It's tragic, that Americans are getting priced out of, or people around the world are getting priced out of urban areas and stuff like that. I mean, it has tragic social effects. As serious an issue you can think about. For all the years I've been doing this, investing in this, looking at it, operating a business like Airbnb, I've never seen evidence that STR comes at the expense of housing. It's just not big enough. You saw the numbers. STR maybe in some vacation places might be 10 or 15% of the supply. Urban, 1, 2, maybe. And by the way, it should be people that are renting their own homes. They're already in the homes anyway. So that's always been a bit of a false label that's been put on it's more of a political conclusion than it is an actual economic reality.
Okay, this computer is going a little nuts here, Brian. Why do you think the institutional investors remain on the sideline of the short-term rental sector? Institutional investors.
So this would be for the public companies. I think it's pretty straightforward. I think after the bubble that you had, if you're still not making money, I think there's questions of viability, period, full stop. I think that very early on in the days of Airbnb, when we were trying to construct the company and what it would look like, and I remember the budget for like 2015 had us losing $500 million. I'm like, that's not a company. It's called Airbnb, Inc. And we got disciplined and we got smart and we started making money 8 years ago. That's what you have to do. So you can talk about innovation, you can talk about anything. In the end, the way to control your destiny in business is to have a sustainable business. If you believe in your vision and what you're trying to do for your guests and your company and your employees, then you owe it to them to run a really good business that's disciplined, that makes money. It's just the way it works.
There's the screen here is going a little nuts. Can we close the pop-up that's coming up on this? Brian, I think you're trying in the back end here. Okay, thank you. There's a ton of conviction around STRs. However, jury's out on a successful business model. OTA, owner-operator, Opco, Propco. I guess we just talked about it. So have you accounted for the fact that numerous cities like Houston, definitely not just New York, are moving to shutter, and most of all urban STRs? I guess this is also, you answered this as well. California introduced a 15% tax for STRs to reduce homelessness. What's your take on this?
I mean, what's the relation between those two? That's just simply taxing it. That's the political lashing out. What's it in New York? If you have a lock on a door, that's considered a separate space, and therefore you don't follow the rules.
That's what they're trying to hold.
These are just political outcomes that only a politician could come up with, and it is the political pressure headwind that everyone in the room faces, and I think we have to take the responsibility to push back.
One of the questions that when we were doing the prep for this, you said, ask me a question about who are the winners and losers out of the pandemic.
Sure. First of all, I think STR is a winner. I think the market expanded. I think people using it expanded. I think a lot of people in the room are building their business on the back of it. I mean, STR is here to stay. I know that it sounds like so simple, but 4 years ago when we were sitting here, it was a very nascent industry. So I think STR is the big winner. I think these hybrid markets where people are having this kind of remote work environments, I think that's a long-term winner. That's here to stay. And so that'll give people more flexibility on where they'll live. And so I think those are the big winners. The hotels have lost share for sure, at the expense of STR. And then that will continue to go. You've got a whole generation of people coming up who grew up staying in Airbnbs, and they're not going to change that. They're going to have kids and families and other things, and they're going to go on to nicer rentals, and the market will continue to expand. I think you're on the right side of travel if you're an STR.
One of the things that the industry does get thrown off by, and Brian, I know, is very focused on this, is the social media buzz about how the fees and extra fees and this stuff. Do you think that, in general, the short-term rental industry has a bunch of work to do in terms of transparency?
Yeah, I think Airbnb did a really nice job responding to. So what Rafat's referring to is that there was some gamification of the system where some of the hosts were apparently charging like excessive cleaning fees. So you think you're getting a good deal, you go to the checkout, and it turns out once you get to a checkout, we have another business called StubHub that we're in. Those type of marketplace businesses, you get the checkout, people are so convicted in what they're doing, they sometimes skip over what they're seeing on the checkout thing, click it, and then all of a sudden they're, whoa, I paid 20% cleaning fees. So I think Airbnb's done a nice job to clear it up. We're doing the same thing at StubHub, just give people transparency. Just remember that once they get to the checkout page, they're already on the downhill slope, so you should be more sensitive to giving them transparency. People are very sensitive about travel. It's their hard-earned money, it's their vacation. As you saw, the two things they hate the most is bad service or lack of being able to access customer service or inconsistency. So you have to deliver a good product. This is a little bit of that. Make sure that you're open about the fees.
How hotels have global companies. Hilton is obviously a global company, not just a U.S. global company. In fact, probably I'm guessing the majority of the growth is coming outside the U.S. This is true for probably all hotel companies. In the short-term rental, Henrik is here, is very focused on Europe. Do you see cross-country or global companies emerging in the STR space? I'm not talking Airbnb. I'm talking the managers. Yes.
Absolutely. Just like you have brand affinities. I'm sure there's people in the room that have, like the State of Starwood versus the Hilton versus the Marriott. I think there will be brand affinities, and that will drive global brands. And I think when they're professionally managed and people get what they expect, you will create brand affinity, and people will adhere to that, and they'll be more loyal over time. It's very hard in the Airbnb world to do things like loyalty programs because that would be taking from one host and giving to another, so it's very hard to do. But you can certainly do it in these other global platforms where you can give people credits or an extra night or something like that. And that will start to create more brand and more, if you will, global network.
One last question. For the service and software companies providing SaaS products, what do you think the multipliers at for now? Multipliers, I'm guessing they mean...
You mean multiples?
Multiples?
I think they mean multiples. So the SaaS multiples are some of the highest in all of technology, and technology is some of the highest multiples in any type of investing because it's asset light, it's recurring revenue, and it's very extendable. Like each incremental user, the incremental costs are very small, different than a hotel. So the multiples, we went through a very weird time in the markets where multiples decoupled from their historic multiples. So if you think about all the years we went out, as clever as Brian and I may have been raising money for Airbnb, we basically did between 9 and 10 times forward revenues. That was our multiple. It went to 23 shortly after they went public. It's not Airbnb's fault. That's the market just applying to it. Now it's back to more normalized. So I think the SaaS multiples blew up to big numbers. I think a good SaaS company in this space, which has the growth dynamics that you have, because I'm assuming these are SaaS companies that support short-term rental, you should probably be looking at something like, first of all, you should have 30 to 40% margins. Any good SaaS business does. And based on that, you'll trade somewhere between 15 times earnings, which probably translates to 3 or 4 times revenues.
Do you think the platform should buy these tech companies?
I think so. I think there's some great innovation. That chart that you showed, the ecosystem, Rafat, there's some amazing businesses that are helping hosts be better, and they're probably closing the gap between the smaller hosts and the institutional ones because they're allowing people to have tools that they can't build themselves. And it's amazing how the ecosystem is built. I mean, it's ingenious. People are figuring out all these different ways to help the host, even the guest, and help find people, service people, et cetera. And so, yeah, the answer is I think there will be some really great companies built. And you always buy the things you can't build. Build the things you can, but if something's super proprietary, you should buy it and add it to what you're doing because it'll give you an advantage long term.
Let's end it there. Thank you, LT.
Rafat,
Appreciate
thank you.
it. All right.